Welcome back. As promised, now we're going to talk about the recovery in demand. In fact, the pent-up demand that everyone's talking about. One of the stocks in focus is Havells. And now, this stock has also recovered quite a bit from the lows. In fact, it's up almost 80% from the lows that we saw in the month of March. Anil Rai Gupta of Havells joins us now to give us his view on which way things are headed and whether there is more in terms of this whole, demand story playing out. Anil, thanks so much for joining us on the show. Happy New Year to you and your entire team at Havells well in advance. Hope all of you have been staying safe. I wanted to ask you a little bit about which way demand is headed, because we've seen this pent-up demand play out post this unlock theme. But now that things are sort of normalizing, what kind of growth would you be penciling in? And if you don't want to share numbers, at least qualitatively, how are things panning out?
Thanks for that. As you know very well that we don't share numbers and it is not the right time to share the numbers. But yes, I think initially when we started out the year after the lockdown, initially we thought that it is pent-up demand which is panning out. But, with the demand holding up, especially from the B-class, C-class towns in the rural areas, it did show a little bit of a shift from the large towns to the smaller towns. The demand was shifting there. We also saw shifting from the unorganized sector to the organized sector initially because the disruption in supply chain for the unorganized sector. I think till that time it played well, the pent-up demand as well as the shift from unorganized to organized, from large town to small towns. It's holding up. The demand is still holding up as of now. We've seen some improvements in the residential sector, so the demand is holding up there. We've seen some sort of revival in the industrial portfolio, also industrial and infra portfolio, which actually have been very sluggish for the first 5-6 months out of the lockdown. So there has been some improvement, not the same as last year, but at least some improvement there as well. So it is not really anymore a pent-up demand. What we see is something definitely which is a positive thing for the industry, that there is a demand which is holding up. I think this particular quarter there has been an increased demand also because of the fact that the raw materials have been rising quite sharply, and to some extent there has been some stocking at the trade level to take advantage of the increasing prices in the future. So probably the dealers and the trade is building up stocks. So it's a mix of many things, but the good news is that at least the demand is there. It's not as what we were viewing when the lockdown was there.
Okay. Mr. Gupta, good morning. Can this spoil the picture a bit, this rise in commodities, or you think it can be managed with a bit of passing it on?
Well, it has to be passed on because the sharp increase has been sharp. It's not something like a few percentage points. The increase in the metals and the plastics, engineering plastics, has been quite considerable. So it has to be passed on. But it does dampen two things. One, of course, there will be pressure on margins because, on one side, the industry had tried to save costs over, during the pandemic. And so those costs, they are retained and some costs are passed on. So I think there will be a pressure on the margins. And secondly, if this sustains, people will have the option to postpone their purchases, even in the construction sector or the refurbishment sector. So there will be a little bit of a stress if this continues.
Okay. Time permitting, I'll come back to the demand scenario and the supply scenario. But Mr. Gupta, what are your view on PLI? Will any of the sectors interest you? Yeah, we a couple of sectors which we are already in, the air conditioners and the lighting, and the government has announced that they will be coming out with a production link incentive. I think it is high time, as I believe that India's focus on manufacturing after the opening up of the economy in 1991-92 should have been much more. I think Havells as a company, we focused on manufacturing throughout, despite the fact that the industry was going out to China to buy products. We invested heavily into manufacturing and our own technology. And that's now helping because the government has also realized that the next big source of job creation will be manufacturing, and I think the government is taking the right steps, and they've chosen many industries for PLI, and we are definitely looking at increasing investments in both lighting and air conditioning with the new PLI, as well as both for the Indian markets and for the export markets.
Okay, you're looking to increase investment. So what would the capex be that you're looking at over the next, say, 1 to 2 years? How do you, I'm sure you've had talks on how you plan to fund this as well. Would you be looking to raise any money? Will this mean higher debt for you? If you can just outline those plans.
Well, as of now, we've always been a self-reliant company, Atmanirbhar company. So we've invested constantly at least 300 to 500 crores in capex every year. We've recently put up a manufacturing capacity for air conditioners for a capacity of almost 1 million air conditioners every year, wherein the earlier company that we had acquired was completely dependent on Chinese imports. So there has been a constant capex, and going forward we anticipate a similar capex would continue, maybe a bit more so, maintenance capex in the other divisions and a higher capex in the air conditioning and the lighting space. But we definitely see that going forward we will be looking at continued capex even in the coming times, because we see that the Indian market will expand and the global markets will also be an opportunity. But to answer your question, I think we are definitely quite positive about the anticipated demand for these product categories. And definitely, we don't really need to raise capital or debt to cater to our capex needs.
Mr. Gupta, I don't know how much debt you actually have, but have you been able to reduce the cost because money is coming cheap these days?
Well, actually, since we didn't have any debt, so there was not that opportunity. But we are a cash positive company.
Okay. Well, I wanted to ask you about the PLI itself. You probably were at an advantage anyway because you were less sourcing from China or not at all sourcing from China vis-a-vis your competitors. Now, have you seen a sizable increase in your market share?
Well, the PLI is yet to come, and so I hope that there will be a possibility of market share increases in the future. But the post-lockdown, we have definitely seen market share increases in most of our product categories, and that is not PLI linked. But it, as I said, there has been disruption in supply chain for the unorganized sector. The consumer psyche is also moving towards more trusted brands and more higher quality products, because more people are spending time away from their offices in their homes, so they are looking at all the gadgets that they use, and they're using better quality products and better brands. So I believe there has been a shift from the unorganized sector to the organized sector. Maybe within the organized sector there has been some movement of market shares also, but we have definitely seen improvements in market share.
Okay, I think the most important point for me in the discussion so far is your comment stating that there is now an improvement in the industrial and infrastructure segment compared to very sluggish moves earlier. Can you just give us a little more details? Are you seeing more government orders come through? Because that was a pain point earlier. Are corporates willing to put more capex? If you can just tell us about the infrastructure and industrial segment growth.
So on both sides, as in the last quarter, we reported that both infrastructure and industrial products which we manufacture, like industrial cables, industrial switchgear, professional luminaires, they all witnessed a very, very sluggish growth, in fact lower sales than last year. So we are witnessing a bit of a positive sentiment. I can't comment on numbers because they're still not completed the quarter, but I can definitely say that there is an improvement over the last quarter. So there is a slight bit of increased confidence amongst the industry to expand capacities, as well as as we are heading towards the end of the financial year, we are seeing government also stepping up their investments.
Okay. Well, all told, Mr. Rai, I know I'm not asking you for numbers for the quarter gone by or the coming quarter, more generally, how do you see your company, say, a couple of years down the line when the PLI investments have fructified? I mean, will you be double the size?
Well, it is obviously we should target very fast growth, but PLI caters to a very small part of our business. We are in a vast range of electrical and consumer durable products. So we are not really dependent on PLI to increase our sales, but we are definitely looking at expanding our sales at a faster pace due to many things. As I said, market share improvements, moving more towards the smaller towns and the rural areas where we have been traditionally strong. So there are many things which will help the growth in the coming years.
Okay. No, I mean, see, this was intended always to be a vision interview. That's why I'm asking you. I mean, if you have to look at Havells a couple of years down the line, I don't want to ask questions like your decadal growth vision and stuff like that. We really are not in a position to see that far. But foreseeable future, how big do you see Havells? Say 2-3 years down the line.
Well, we should be in a much better position than we are today.
Okay, you refuse to quantify. Okay, we'll leave it at that. Anil Rai Gupta, it was a pleasure speaking with you. I'm glad to hear that 2020 has been kind to you. Here's wishing you a great 2021.
Thank you. Thank you very much.
All right, let's quickly take a look at the past financials of Havells as well, starting with the revenue snapshot over the past 3 years. Remember, these are 3 years. Okay, we have the FY20 dipping a bit, and now you will get the EBITDA performance as well, and then the bottom line.
Okay, well,
okay, that's EBITDA, and now you have the net profit. Okay, there it is.
Yeah, it's one of those expensive stocks which always keeps getting more expensive.
3 times, no?
Yes, and perhaps one of the candidates to be a nifty stock as well over the next 1 year or so. But for now, Mitesh Thakkar is joining back. Now, what you're saying is that the Nifty, after cooling off a little bit, is once again starting